Okay, guys, good morning to all of you. Can you hear me loud and clear? All right, morning to you, Lian. Morning to you, Lionel. Lionel, I will reply your text shortly. I missed out your text yesterday. Sorry, I'll reply to you. Sorry about that. Alex, morning to you. Janet, morning to you. Louis, morning. And right, loud and clear. Okay, guys, today, if you really like my alternate market news, then you really need to pay attention and stay online with me for the next 1.5 hours. There's so much information to share with you today. Now, probably because we didn't have MAO on Monday and we didn't have it yesterday. So the news that I collected over the last few days is ridiculous, a lot. And there's so many and it's coming in different angle. So I decided that not to split them to the buy side or the sell side. I decided to give you a roller coaster ride. I mean, I give you a buy, then give you a sell and a buy and a sell reasons. And then you will make your final decision on what to do for yourself because it's really difficult to balance it. Okay, got my point? So today, MAO, you may feel by the end of the alternate market news segment, you're like kind of confused. Am I supposed to be a buyer? Am I supposed to be a seller? You know, that type of feeling. Yeah, you will have that. Okay. All right. But of course, if you really love the alternate market news, then it's really it's a bountiful sharing because there's lots of stuff to share with you. All right. So guys, if you are okay, quickly now get your friends to come in because they will definitely thank you later because they will really enjoy this particular, this sharing today. I'm very sure that they will love it. I tell you that. Okay. Okay. Let me just share some photo to my friends on my Facebook and get more people to come in. Okay. Okay, all right. Susan, let's forward out that. Also forward to the Trade with the Boys Cambodia site, yeah? As in the Facebook page, yeah? Yeah. Okay, guys, again, ready? All right, let's go. Okay, guys, good morning to you once again. Today is the 1st of June, the brand new start of the month, and it's Wednesday. All right, now today we have a few things to cover, but the main topic will be going around what happened in the White House. Yesterday, I shared my students that actually Biden has invited both this Jerome Powell and Janet Yellen to the White House. Okay, and obviously the main topic is about inflation. But of course, from the reported data, the news, it seems that they are not looking at Biden coming in to give any form of guidance, but in fact, they want Jerome Powell and Janet Yellen to go and do what they're supposed to do. Okay, so I'll talk about this a lot later. Then, of course, as you know, our crude oil prices has went up higher. Crude oil hit 115 yesterday, and a lot of my students profited from the market. Congratulations to all of you. And the question now is this: there's a lot of people now on YouTube are calling for buy on the market. Okay, they're saying that now is a good time to buy. The market is bottom up. The last 5 days was good, and blah 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 blah. Now, to me itself, I reserve that feeling now because why? Because let's just go back again. The COVID issue in China has not settled down. Yes, it's not settled down yet. Okay, first problem. Now we are now having June month, right? Okay, July will be the reporting season for the second quarter. And it's very clear that the second quarter earnings will not be better than the first quarter. This is definitely for sure. Okay. The forward guidance from the majority of the companies are already very clear on that. Number 3. Now, obviously, it's all right. Inflation is creeping around the corner of every part of the world. Your UK, Germany, EU, all the inflation numbers are going up. All right. So it is impossible that with the high inflation, the economy will be able to progress at this current stage right now. And of course, with US Federal Reserve is going to increase interest rate, okay, again next week. Plus, today is the start of the QT, quantitative tightening. I cannot see how the month of June can be any better than the month of May. So of course, again, the question is this: are we going to have a bull rally all the way up, or is this a bull trap? All right, so let me ask all of you now, there's 60 of you right now online, okay? Do you think it's a bull trap, or do you think that this is a bull rally? Please key your answer right now, okay? Bull trap or bull rally, okay? All right, let me see your answers. Well, I get some photograph being taken up, okay? Let me hear you guys. What do you think? Like now you posted something that's illegal. Facebook immediately banned you from the wording you come up, but I can see it. People BSH. Okay, all right. Let me see. Okay, what we have here. Michael says a trap. Okay, Nelson says a trap. Daniel trap. Okay. Leslie, I hope it's a bull trap. Okay. Okay, Amir says bull trap. Sharif, I believe the bull trap. Andrew, bull trap. Not BS, that's for sure. Okay, Louis, Janet, Chukiet, Alex. Okay, all of you all say it's a bull trap. Okay, all right. Seemingly that maybe all my people here itself are thinking that way. Yeah. Now someone did say, Kel, because you are so bearish, that's why your students are also bearish. If you have a trainer that is bullish, then all the students are bullish. Okay, I mean it is possible. Yeah, what the leaders say maybe may create some what they call it may actually cause some decision. I mean what they call blockage here. But you can see that I didn't purposely go and find you all the negative stuff. I actually give you the positive stuff. And in fact, last week itself, we were very confident that the market will rebound. Because the market hit the level of 33 S&P, right, came down all the way to 20% mark and recover from there. So there's nothing about to hide. When it's supposed to buy, you buy, so sell, you sell. All right. Just that I will prefer to sell when the market goes up. So to me, it's actually a bull trap. And I know that by saying this is going to offend a lot of people in the market, but I just have to be honest with you. All right. So because why? Now, do you know that why I have this picture at the back behind me is actually the fish farms? Yes, we know that chicken today, right? All the chickens from the Malaysia side will be not coming in for a while. So likely you're going to see the impact very soon. Okay, you'll feel that way very soon. But now apparently there's a new wave of, so-called diet not coming in, and that is fishes. Apparently the fishes prices are going up again. So now we have chicken, then we have fishes, then what's next? So to me, this is the real impact of the inflation problem that's happening right now. And that's the reason why Biden gets Jerome Powell into the White House with Janet Yellen. All right. And I believe that, right, there's more than meets the eye. But of course, we'll come to this very, very soon. Okay. So thank you for your sharing, guys. Seems that everyone is hit bull trap. Let's hope that is correct. Now, disclaimer apply as usual, my friends. My job is to make sure that you trade well. Your job is to do your risk assessment, and then you use whatever I share as a form of guidance. Now, end of the day, we don't know whether the market will go up and go down, and no one can predict the market, but we're just going to give you a fair assessment of the whole situation here, and you make your final decision. Yep. Oops, sorry. Hold on, there's some error here. Hold on. Okay, hold on. Let me just do this. Okay. All right. So the Wall Street joke of the day, the ha-ha joke, is that the Federal Reserve now, everybody is just waiting. Okay, the bull is waiting because they need the Federal Reserve to give the insight of what Federal Reserve will do. Now, the new story now is that they know that June, July, they will hike interest rate, right? But they actually expecting that September, Federal Reserve is to come out and say, you know what, inflation is down. Let's stop doing any hiking. This is what the bulls are all anticipating. And you can see that across the mainstream media, right? Almost every article is about this. Now, one thing in the market for 20 years, I learned something here. When the media cover a particular story and want you to believe in something, usually the impact will be opposite. You understand? You got a point. If the media tell you, oh, market is very bad, it's very terrible, it's going to crash. You see what happened last week? The market rebounded 5% from the lowest to the highest point. So now this week, when the market has rebounded, right? People got caught last week. Now they are telling you, okay, it's time to buy. What do you think? All right. So the bear is also waiting for the Federal Reserve to say that, nope, we are not going to budge. We are not going to listen to Wall Street. We are supposed to hike interest rate. We will hike interest rates. So that's why the bull and the bear now, both of them are all watching the Federal Reserve. And of course, the jack of this Federal Reserve bottle, this box here, will have to make a decision. So apparently they made up, right? As you can see. All right, they made up, all right? Now, straight away, when I saw this itself, right, the first thing that comes to my mind is something here. What do you think? What is the first thing that came to my mind when I saw this picture? What do you think? Come on, let me see do we have the same thinking or not? The moment I saw this picture, the first thing that captured my attention was not the conversation, was not the White House Oval Office, was not, of course, Lincoln and the rest of the president, or something else. What do you think that caught my attention? Everybody, if you can do me a favor, let's participate. Now, today's MAO itself is going to be very interactive. It's going to be full of information, and definitely it's all right. We're going to have a lot of fun together. Okay? Yes, Leslie, you are good. Right, Leslie and Kai, all the way from Germany. All right. Yes, indeed, the mask. The first thing that caught my attention was her mask, correct? It was her mask. Can you see that? Yes. How many of you spotted that? Okay, spot the difference, yeah? Oh, Stephen also saw that. Joseph, Yellen to replace Powell? No lah. Janet Yellen already done deal with a Federal Reserve. I don't think any Federal Reserve can come back in again. I don't think so. If she come back to again, I don't think so, yeah? Yeah, it was her mask. So, of course, straight away in my mind, I said, wait a minute, why must she put on a mask? I mean, she's also like equal distance away from Biden, right? So why must she put on a mask? All right. Now we don't give ADA coin anymore, Leslie. The market is so bad, crypto. If I give to you yourself, right, there's no point, right? Okay. All right. Yes. So I had to think and remember, I don't think I ever saw Janet Yellen reporting that she got COVID. So that's about the fun of it, trivia, yeah? Trivia. I began to dig. So I noticed that, right, there was an article saying that Jerome Powell has been working from home and also do some masking and do social distancing protocol, right? Okay. Because the time he was very close with Donald Trump, and Donald Trump contracted the COVID, remember? Yeah, okay. Then after that, right, I checked on Joe Biden, and apparently, right, Kamala Harris was also have the virus. And in fact, recently, right, Biden's daughter also got the virus, but apparently, father didn't get. Okay, I can't find anything about this President Biden having COVID. Neither can find any news about Jerome Powell having COVID. But from this picture itself, right, I kind of feel that, right, I think that they had, if not, why they were like so relaxed. Well, this Yellen had to put on mask. Anyway, I tried to dig out on this. They did not report on this part itself, but I just come to that for the trivial sake itself, right? That's why I say a lot of things in the market, in the media, right? You mustn't read everything on its own, okay? Sometimes they may not tell you the exact truth. Anyway, all right. So why are they so upset, and what is the thing that's holding them in right now? Okay, let me just do something here again. Sorry about that. So what is happening? Why is this? Why must they meet up? Right? What's the main reason for that? Of course, there's a reason for that. Yeah. The reason is because now, right, the gasoline prices around the whole world is getting ridiculous. Okay, 1 tank of gas devolves 33% of the Brazilian's monthly minimum wage. Of course, the monthly minimum wage could be very low, but it actually devolves 33%. That's a real crazy numbers. And of course, okay, wait, hold on, something wrong here. Okay, hold on a minute. Oh gosh. Oh dear. Okay, something went wrong in my site. Hold on here. Accidentally press something else. Okay. Okay. Now the number of gallon of regular gas per average hourly wage, which means that right now, right, how much money you make versus how much you can get for the Yes, right. Has ridiculously came down from the top to the bottom now. And we are near a very dangerous position because that was what happened back in 2011 and onwards during the pan, whereby after the Lehman crisis. So the question comes in, what is happening right now? Because the gasoline prices are going up like crazy. And the wages itself is not able to compete. And this is a big problem here as well, because once people cannot afford, right? There's two ways out. One, they stop working altogether, or they'll just find another way to reduce. That's the reason why some people actually tell me to care, because that's the reason why they're introducing the 4 days work, so that on a point, work get done, but the pay is still the same. So this is what is happening right now. And you can see the one that is very scary now is S&P Global Worldwide PMI Index versus the food production versus the food prices. Oh my God. Now take a look, guys. The food production actually is going down. Is actually going down. And because why? Because of the supply chain issue. Now understand why Malaysia decided that not to export this chicken to us. You can see the point. Why India has even decided that maybe they should reduce the export of sugar. So think about this. All these are happening across in the world right now. While when this happens, right, obviously demand and supply comes in, you will see the prices going up. So now the question is this: if this will continue, right, will we actually have a famine coming in? This is actually quite scary. Think about this, yeah. But of course, I don't think Singapore will get this type of level, but it's probably across the whole world. And of course, those countries, they have problem, right, are the poorer countries, and there will be repercussion. And that's the reason why I think that there's something that we need to really take note of that. So let's just go back again at what Joe Biden says to this Jerome Powell, and what Jerome Powell actually listened. All right, so President Joe Biden huddled on Tuesday with Federal Reserve Chairman Jerome Powell of fighting the high inflation after writing in the Wall Street Journal, says that, right, the central bank, which is Federal Reserve, has a primary responsibility to control inflation and promising not to meddle. Now, this is a very, very important statement. This very word itself, not to meddle. So actually, right, what is Biden trying to tell you is that don't fight with Federal Reserve, because I have given the right to Federal Reserve to do what they need to do. So this is something very important. It will lay a lot of what they call our preparation for the market. So he actually came in and whacked Donald Trump in a way. My predecessor demeaned the Federal Reserve. We know that what happened during the time when Donald Trump was very pissed with Jerome Powell and keep on whacking him online, right? Remember, through Twitter? And the past presidents have sought to influence his decision. Obviously, it's not about Barack Obama, it's about this George Bush and friends. So all these were trying to hit the Republican, obviously, right? Right, inappropriately during the period of elevated inflation. And Biden said, I won't do this. This is a very important statement again. He said, I won't. So whether or not you believe in him, but I try to believe in him because he really needs the inflation to go down. Because now, my goodness, look at it. This is the consumer price index. And look at the numbers since April last year until now, right? Look at it. The number has been steadily going up and it's not coming down. Even though the last number in April so-called came down a little bit, but I totally don't believe it, because I told you before, the reason why it came down was because the crude oil price came down a little bit during the month of April. But month of May, we just saw it, right? We ended at 115. So it's impossible that May data can be any lower. I don't think so, unless they want to manipulate the price. I mean, the what do you call the statistics. And because of that, right, you can see immediately the dollar actually form a base. Now, remember, guys, I told you, right, I believe the dollar is going to find a base very soon. And truth be told, let's take a look on the dollar right now. Okay, can you see that? Beautiful, guys. You see that? Whatever I share itself, right, it really came true. I told you the dollar will find base on the moving average, and very soon it will go higher, and it's coming in. So I still believe that 103 is going to come soon. And if 103 clear, we will see 106 next. And I am very confident that this trade will turn out fine. And those who went long on the dollar with me, congratulations to you once again. All right, guys. So you can see that, right? We actually, pretty clear what we are doing, and we revise and we actually follow through what happened. We go back to it. So all these tell you why more and more people likes this MAO of us, because we tell the truth. over here. Thank you very much, Eugenio. All right, yes, indeed, my dollar was a little bit spot on, right on the spot. Okay, all right, so that was the dollar. I'll come into this later. All right, now the thing that why Biden is doing all this, because Biden now has a big problem, right? We all know, right? Biden has a big problem. What's the problem? What's the Biden's problem now? The biggest problem that he has right now. Yes, indeed. He really has to fight inflation, because if he don't do it, he has a problem, because his rating itself is ridiculously low. My God, he has one of the lowest rating ever. This is really crazy, guys. This is really, really crazy. I mean, look at it. Look at it. All right, his public approval is 36%, lowest of his presidency. All right, since the very first day he president, and now it's 36%. Now, I actually haven't had time to go and see how the lowest level of president in Angola, but it's, to me now he's at the lowest. So it's a very, very good chance this president will likely not be able to complete his term if this really continue like that. All right, of course, again, we're talking about he'll finish his 4 years, that's for sure, because that is his minimum. But of course, again, if let's say the Democrats really want to win, then they may have to do something in between. I don't know, something may happen. All right. So the thing is this, at the moment now, the fear and greed index now trading at 22. Hey, wait a minute. The index itself was at 6, right? Remember? And of course, the Dow Jones went up by 5% or more during the last 5 days. So easily should be at least 40 or 45, right? But you notice that the numbers are not moving up. So let's take a look at the timeline numbers. You can see that. Yes, it's better than it is. It was at 6 back then, and it was a very bottom of the market. And that was the reason why I called for buy. I told you guys that it's at 6 right now. Go for buy onto the stock market. And then now it's basically going up. But as you can see, the average itself is at 25 on the first level here before it goes higher. So now it's 22, right? We are kind of near the first resistance. And that is the reason why I kind of like feeling very uncomfortable with this rally. Okay? Guys, thank you very much. This Kai telling me about this, what you just shared with us. Germany politician officially criticized the central bank, the ECB, yeah? Okay, all right. Christopher Chai says that, welcome Donald Trump back. Okay, let's see how it goes. So the thing is this, right? When I look at the put call ratio, then I go like, wow, look at the put call ratio. It's 1.07, 1.01, 1.08, and 0.92. Wow. Now this is very clear, very bullish, because that means that everybody now is so optimistic now. It was so pessimistic last week when it was like a much higher figure, right? And of course the market bottomed out. So now this week, it seems that the put call ratio now is better than last week, and water market is up. So what do you think will happen next? All right, what do you think will happen next? All right, I'm going to throw you a curveball. So the thing is this, I'm going to, just to show you and understand this itself, right? I'm going to put myself in a position which I hate most to make myself get unhappy. Why? Okay, let me tell you this. Remember this game where Champions League came in and obviously Liverpool lost to Real Madrid. Now I was there watching at Tampines Hub and it was crazy. It was eccentric, electric. Well, basically, it's more than 3,000 people, I tell you that, easily 5,000 people. It was so suffocating, even though the fan was full blast, right? At one stage, I was feeling like almost dying. Okay, anyway, the point is this. Before the game, okay, I was there, right? My friend was beside me and said, Kel, do you bet football? I said, I don't bet. But then he said, okay, fine. And he was trying to look at it, the odds. And then I just capo a bit, right? Went to look at the odds. And when I saw the odds, right, I said, shit. I'm sorry. I said, gosh, oh no, Liverpool may not win, at least in the first 90 minutes. So my friend said, how you know? I said, look at it, let's look at it. Look at the odds, okay? Look at the odds. Look at the odds. The odds was this on Singapore pool, by the way, yeah? The Singapore pool gave Liverpool a 2.1 odds for winning within 90 minutes, but they gave a 3.4 for Real Madrid. Now, we all know that how Singapore pool works, okay? That means that, right, many people is betting on Liverpool. That's why the odds is 2.1, right? So lesser people bet on Real Madrid. So that's why the thing is 3.4. You got it? Yeah. So honestly, obviously, all right, obviously, when Real Madrid won it within the 90 minutes, yeah, 90 minutes, all the bets that some people took, all right, It's all winnings. Oh my God. You understand my point? At one stage itself, right, I remember the odds went down to 1.99. In fact, my goodness, before the game start. So this is how the world works, guys. Okay, you think that you are gonna win. You think that the boys will let you win. Come on, think about this sometime in life. So anyway, just a trivia here itself, right? When I saw this, I was like, oh, my heart just sank. I said that it will really take a miracle for Liverpool to win the first 90 minutes, and unfortunately, Liverpool lost. Okay, got it. Okay, so why do I talk about this? It's the same concept here over here right now. Look at the put call ratio. It seems that the next few days, everybody is so bullish. Everybody is so bullish. Yes. Okay. So there's two sides here. Either you believe in this and everybody start to buy and the stock market go higher. That's good. That means that what the punters are getting correct. But I always believe in this. If punters can get it correct, right, there will be no losses in the market. There's been no losers in the world. So all I can say is this: if you can understand what I say itself, right, you will likely know where am I leading this to. So if you can understand what I just shared the last 5 minutes, right, can you key the word understood? If you really understand what I just shared with regarding of the options market and compared to what happened in my little experience in the Champion League and the Singapore Pools data, and then I show you in a way, if you understand, key understood right now. Let me see how many of you can understand what I just said. All right, while you're doing this as well, get some water, okay? By the way, I'm going to have my trade live session very, very soon, in about 1.5 hours time. Back-to-back stuff. So I really need to, get my water. Now, I'm very, 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 very sure no one in Singapore will use the Singapore pools as a form of a material to share with you about the stock market. I am very, very sure. Now, to me, I'm a very unorthodox trainer. I like to show you real stuff. And I really, you see, I can't get these odds now because it's over already, right? Now, I actually, on the time when I saw these odds, right, I know that I will talk about this very soon in MAO. That's the reason why I got this screenshot. So you can see that, right? Actually, I prepare myself, as and when, wherever I am. All right, okay. Leslie says, understood, no friends in trading. Okay. Okay. Soccer is so kelong. Why people are so crazy and die hard over it? Okay. Are you a soccer fan, Fred? You are, right? Okay, continue, yeah? Okay, anyway, so maybe you can explain this, right? On the 26th of May, right, when crude oil was trading at 109, remember? Crude oil was at 109.90, but 110, I'll make it easier for all of you. All right, 943 people saw this posting, okay? Not too bad. All right, and then of course, 35 of them actually engaged. Now, imagine if 900 people watched this, saw the chart, and 900 of them all traded, then we have 900 people all profiting from this crude oil. Do you know that? But again, it's always like this. Anyway, so I put there, are you ready for a bigger inflation period if the crude oil goes to 115? All right. So recently, it's all right. We saw the gasoline price come down a little bit, and after that, say no, it's going to go up higher again. So I tell you, there's two ways to look at it. One, you can just cry buckets after that, or you can actually make money from the market. And now take a look, everybody. The crude oil price shoot up all the way. I told you, right, it will go up to 115. It was a 109 back here, right? I was saying that, right, it will go back to 115, and brilliant, it actually hits. Can you see that? This is the thing here. We gave you a call on the 27th, is it? I can't remember again. Already. 26th of May. We shared with you about crude oil, and it was at 110. And then after that, 5 days later, it's already at 115. So every contract, if you traded on the crude oil back then, you will make easily $500 US. That will pay your bills for your gasoline prices, right? You should pay your bills with this call, and it's absolutely free. No need to pay. So people who are smart, like example, Chong Ming, wow, look at it. What up, man? $2,531 US by buying one contract of crude oil and profited $2,500. All right, $2,550. This is good. This is really good. And of course, we have Susan. Wow, coming in again. Make about $345 for $6. And of course, she got another small account, she say. Okay, trading at $200. So guys, You come for MAO, you spend 1.5 hour listening to me, and you get some tips on the market. Even you miss that tip itself, you look at the Trade the Boys Facebook page, and you can see that everything is there. So that is the reason why you should really consider to join us, because we are really real. We don't tell you stuff like, okay, market will go up, it will go up to this point, that point itself, 500 points, all this stuff. We don't. We give you specific numbers for you to profit from it. So guys, again, if you think that my crude oil was spot on, can you keyword crude spot on for me, okay? All right, thank you very much. And once again, guys, this is how we do it here. We do not want to give you bullshit stuff. We tell you exactly what happened, and you will just do your own assessment and you trade according to plan, okay? All right. So guys, if you think that I was okay, can you give me a thumbs up on this? Give me some emoticons, some love, some care. All right, love over it, just love. Okay, I'm fine. Okay. All right. Once again, thank you very much. All right, thank you, Nelson. Oh, good for you. You make my money. Very good. Excellent. Now, Susan, later you buy lunch, okay, Susan? Okay, I want this duck porridge. Then to put in more sauce for me. Okay. Yeah. All right. Now, before we have our trade live later. Yeah, Chong Ming always spot on with your call. Yeah, last time he won in Netflix, he won on Tesla. Chong Ming very good. Chong Ming. You said must follow Chong Ming. Chong Ming, are you around today? All right, maybe he's not around today. Yeah. Okay. Usually, if you're around, he will say good morning. Okay. All right. Continue. Thank you. Okay. So now, guys, we are going to look at this data for today. Okay. Now we saw the consumer confidence was pretty good. Surprising, yeah. Very surprising that the consumer confidence was much higher than expected. So I was wrong. Yeah. Okay. Wrong. I just beat myself. All right, very surprising, honestly. But of course, it makes sense. Why? Because April data was not so good, right? So that's why, the crude oil was coming down, right? So maybe that causes it to have the confidence level higher. Yeah, maybe. Okay, anyway, this week, we will have the ISM manufacturing PMI. I expect the same number, similar. But we're going to have a very interesting one on Thursday, which is the ADP numbers, right? ADP numbers. Now, apparently, look at it. It seems that they're expecting a better ADP. Interesting, yeah? The ADP number have been coming down recently, as you can see. But this time around, they're looking at a better number at 295. Okay, ADP are private sector numbers. So maybe it's possible. Private sector, okay? Oh, yeah, Chong Ming not around today. Yeah, I can see that. Okay. Okay, all right. The initial jobless claim, you're looking at 210, so about same number. But very interesting itself, right? We actually see that the non-farm payroll figure, the public sector is going down. The public itself is looking at 325. That's going to be a scary one. Okay, so overall, what I'm trying to say is this. Maybe the private will increase because maybe more people going back to work. They will need people coming in. So that will be a positive sign. But because of that, right, the private are hiring at a better price. The public side may lose some of the jobs. That's the reason why I might think that way. Okay, anyway. We'll look at it tomorrow. We'll see how it goes. All right. Okay, continue. So Dow Jones yesterday, we saw it plunging at the very opening bell. Then after that, we saw it recovering every ounce of it. And then it ding dong, ding dong, ding dong, ding dong for the longest of time. And then after that, the price came down from some profit taking and bring up again. Then came down again. So it was actually a very roller coaster ride. The whole day, the market just ding dong, ding dong. So I want to bring something to you out, your notice first. Let me see there. Does it make sense here? Let me hold on. Bring the chart now. Okay, hold on. Where's my chart? Okay, here we go. Okay. Now this is the dollar yen, right? This is a dollar, but I want to bring you something else. S&P 500. Okay, let's take a look. S&P 500. Now this is where it gets very interesting. Everybody take a look here yourself. Okay, I'm jumping the gun because I actually prepared a slide for this. So I'm going to jump the gun a bit. All right. Remember yesterday I was just telling you. Last week. Sorry. Last week, I was just telling you it's all right regarding about the S&P 500. And I said that, right, the volume has declined all the way for the last 5 days when the market was going up. So it was a very interesting question mark here itself when the volume is coming down while the price is going up. So I didn't like it. Right? Then yesterday, we have a very considered a volatile day because it went up, came down, went up, came down, went up, came down, right? We have a very huge trading volume yesterday, very huge. All right, now I want to tell you this upfront, okay? Straight away in everybody's face. We're going to be seeing a very big movement this week. That means that it will be easily a 1,000 point upside on the Dow Jones or 1,000 point downside on the Dow Jones. I'm telling you right now, right in our face. This week, yeah, starting from today, there will be a 1,000 point rally or 1,000 point sell-off. One of them this week, it will happen. Yes, indeed, because of this huge volume that happened yesterday. Now, there was no much option expiration yesterday. It was very normal day. It's not a Friday and anything else. So this volume is a very, very questionable volume. You understand my point? Yes. So I'll talk about this later. Yeah. But I can tell you upfront itself, right? This week, if you can, it's going to be very rewarding if you can actually get a hang of it. Okay, the direction, of course. Okay. All right. So let me explain more and what happened on yesterday's market through the SCNBC correspondence. Yeah. So the Dow Jones dropped 200 points, finishing the month little change in a turbulent May. Okay, so they're telling you now the month of May was turbulent, but of course the market, finishing a little change. Now, because what happened was because we have a freaking 5 days rally. All right, that's the reason why the market eventually ended almost not changed, and that's where I get a bit scary. Okay, let me just show to you again a chart. If you cannot see this, right, let me bring the chart in again. Okay, let me show to you right now. And then I change it to this monthly chart. Okay, can you see now? Now it's better here, I see. Look at it. Oh my goodness. Have you ever seen a doji so perfect in your life? Look at it. It's a perfect doji, you know that, really perfect. Right? You have the long tail on the top and the bottom, and the opening and closing is almost identical. My God. Okay, so when did this last happen? Right? Let me just scan for you. I didn't do this research here, but since we're on it, I shall take a look. Right? Let's take a look. Yeah. When the last time we see something like this? Let me take a look. Let's see. Well, I don't think I see one. Okay, here we have one. Okay, we have one right on the December 2014. We have one more over here. Okay, we have one more now. August 17. Okay, one more here. June 18. Okay, so you can see that almost the next month we can see a very big movement. Okay, right, the body itself is quite big movement. Yeah, for example, for this one in January 2015, the S&P, the Dow Jones, sorry, the S&P was at 2058 at the highest level. 2071 at the highest level. 72 went down to 1988, so down by almost 100 points. Okay, then this one we have is probably down about 100 points too. Then this one we have a rally, and the rally was up by opening low to high is about 70 points. This one is a rally that is from low to high, it's about 160 points. Okay, so what I'm trying to tell you is this, guys. That means that this coming month of June is usually a slow month. Right, month of June is a slow month, but apparently with this doji right now, right, we're going to see a very big movement coming in. It's like our typical DJDD, where we explain in our TWB, what they call one of our setup, right? So that's the reason why I say this volume itself is very suspicious. Okay, this volume itself, no play, yeah. We may see a very big movement coming in. I'll talk about this later. Okay. So now the thing is this: we can see the S&P now trying to flip the bear and bull territory. We also know that, right, at the moment now, the Euro zone inflation rating is really at a high level. It's at the record high for the 7th straight month, 8.1% in May. So if you think about this, when it comes to June, oh my God, how high would it be? So now the thing is this: EU have just confirmed that they're going to agree to ban most crude import from Russia. So very good. So they're going to ban from Russia, but they are buying on the side. My goodness, what type of thing are they doing? So anyway, continue. So we do know that the Federal Reserve are going to be hiking interest rate in the month of June, and this will actually cut the economy because higher inflation and slower growth is going to help, right? We all know that already. I'm not going to go through this again. But the main thing is this: overall, last week was the best week since 2020. So we all know that. But you must understand this is a very important statement. Bear markets are incredibly difficult to navigate because they are inherently volatile, and prone to sharp upside rally. I told you, right? In a bull market, usually the rally is very stable, very nice. Okay, very stable. But in a bear market, right, the rally will always be a very sharp V shape because why? It actually kills off all the short sellers in between. So that's the reason why you can see all the sharp rallies recently. In the bull market, right, you can see it was back in 2019 to 2020, where every day the market just go up a little bit, but it kills off the short sellers bit by bit. So it's a very different way of how they do it in a bull market versus a bear market. So apparently from this BTIG says that, right, the bear market, eventually there'll be much lower level to go. Now it's not very interesting because normally when your article is pretty bullish, they don't really put a negative picture into the article. But so surprisingly, they put it in. So I think I might as well just share with you and let you see how they play this game by balancing both sides. Yeah. Okay, so of course, once in a while, I will let you take a look at how to use a TWB system. Now, yesterday was a very beautiful day. Yesterday was a DJDD, Doji Directional Day, right? So very clear, all my students will know that the market will go into one single direction as long as the market trades together alongside with the OP. So very clear, the opening price of the day was just marginally above the pivot 2 level, 33,223. So without a doubt, right, the MLP was 33,272. So the MLP, the OP, the pivot was so near each other. So when the market breaks below P2, right, without a doubt, just pivot alone below OP, below P2 is a sell already. Below MLP, after triggering, is a sell. Right, below OP on a doji day is a sell. So it was very clear. But I warned students this. I warned them. The KSI is green and it's uptick, right? It's uptick green. So uptick green means that the market buying is still there. So that's the reason why yesterday we shorted the Dow Jones all the way from 33,200. We shorted all the way down to 33,800. And that sweet spot itself, right? We buy back some of our position and left a trailing stop. And beautifully, both happened, okay? We got our profit at the beginning and we also got our trailing stop being stopped out, okay? But at least we were protected because the price went even higher. So my point is this, that's the reason why the KSI green uptick is so important, but that gave me the information that the market will not end at the day low. Got it? All right, so let's see what happened yesterday. As a trader with the TWB system, you know that as long as the market opening price is here, and it goes below P2, right? Without a doubt, below OP, CCYR, you just have to sell and sell, sell and sell, sell and sell, sell and sell. So what happened yesterday? All right, you will have profit here, 1 profit, 2 profit, 3, 4, 5 big one. Then this one, you did not profit. This one, you did not profit. This one, you profited. So basically, right, if you follow the system below OP, below P2, we just keep on shorting, right? You will have made at least the first 5 trades over here in profitable manner. And of course, towards the end itself, right, usually we don't trade, the market actually becomes not that profitable for us. Okay, so that is something that you can consider and think about this. So guys, below OP, below P2, you just have to focus on the sell side. Exactly, you just had to focus on the sell, and yesterday you would have made very good money. All right, so how many of you made money from the Dow Jones yesterday? If you made money from the Dows, can you do this? Profited from Dow. If you actually have profited from the Dow yesterday because you actually sold together with us, can you keep profited from Dow? Let me take a look, please. Thank you. What's that? Wow, that's quite a few of you guys. Let me take a look. Wow, that's quite a few of you. Wow, we have Kai all the way from Germany profiting from it. Okay, let me take a look. Yeah, okay. Okay, let me see. Oh, we have Kai all the way from Germany profiting from it. Then we have Ching Hui, Lian, Jason, Peter, Chongming, Leslie, Rachel, Susan Tan, Joe, Claudia, Christopher, Yo. Wow, Louis, then Leslie. All right, Claudia, Kelly, Susan. Wow, well done. Okay, well done. Okay, excellent, guys. Fantastic. Okay, so many people did ask me, how did I get my 32,800? All right. Okay. I'll show you very easy. Okay. First of all, the thing is this. I remember telling you guys when the market itself is a green uptick, and if the market really had to come down, then there's something to take note of it. It will be 30. Always remember the KTR minus 3, right? I told you before, right? Okay. So I noticed that 32,900 was the KTR minus 3. Okay. So that was the first thing that caught my attention. And that was the reason why when I saw the market plunge through 32,900, right, I wanted to cover back at that point. Then I realized that when I was looking at it, it was coming down very, very fast. So I realized that, right, the maximum I can see is just another 100 points more because it's KTR minus 3. So that's the reason why I came to a figure of 32,800, a whole number there. So because I don't think that with KTR, I don't think that the KSI green and uptick, right, the market can go more than 200 points after KTR minus 3. So I gave the KTR minus 3 minus 100 point at that point at 32,800 to buy back. That's my reason. Yeah, that was my one and only reason. Okay, nothing hocus pocus. Not because I see tea leaf, I see the moon or star. I just basically use that concept over there itself. And of course, I did say that, okay, hopefully the price will go lower. But when I saw the KSI jump here that came in, I know that the boys are going to come in soon. Because the KSI is green, right? Day chart is green. So once the boys came in to buy, right, you can see very clear that the market went up. So you can see that all these tell and speaks volume of why our system itself is able to tell you a lot of stuff as long as you pay attention to details and you remember the rules here. Okay? All right, so that's my reason. Yeah? So hopefully you guys remember that. Next time you see this happening, you know what to do. Yeah? Okay? Congratulations to all of you who have profited from the market. So cool, right? I mean, how many schools can have so many people profiting at the same time? That's something incredible. So thank you guys once again for believing in me and of course making money from the market. Congratulations. Well done. Okay, so with that, that's excellent. Let's continue. All right, how about gold? Now, gold was the same thing. Now, yesterday I was very bearish on gold. I told you guys why. Because it's the same thing. It's DJDD, so it's a doji directional day. And the better thing is this: the opening price itself was already below the pivot 2, right? Below 1857. So again, the same thing. It was below OP, below pivot 2. So CCYR sell. And because it's a DJDD, it's a sell. But the only thing is this: the KSI was green. There was no blue bar. I think that was the reason why some of you guys was holding back because you all saw this. Now, honestly, I was also holding back because of this. But eventually, I thought myself, this never fight with pivot, right? So I went with the flow. I shorted a little bit on the gold, and of course, when it came down and he broke the MLP, he broke the MA. That gave me the confidence that maybe the market go lower. But still, because of the KSI was green and it's an uptick green, right? So I decided that anytime it goes down to every gantry, I must take some profit. So that was what I told myself. Take a look now. So initially, the market came down first, right? Below OP, below pivot 2, the price actually came down. And once it hit our KTR minus 3, minus 1, sorry, you notice that the boys was already buying. The blue bar was retreating. So that's why the market have a CCRY here, the market recover. So you see, it's so important information because you know that the KSI is green, the market won't go down so easily. And then after that, right, because it came down again below OP, below pivot 2, I sell again. And again, when it came down, I booked my profit. And again, it went up. Then again, it hit the OP of the day and then do a CCYR. I shorted again. And again, this time now, when the KTR minus 2, I buy back again. So don't you notice that it's a very simple way I'm doing this. I'm just basically follow through the colors. And then every gantry, I just buy back my position. So when the market came down and do another CCYR again, so I tell myself, okay, we sell again. And then same thing again, when the price came down a little bit, I just gonna buy back. But of course, it was very late, so I just put a limit order and it was filled by the end of the day. But this is the point here itself. That I want to explain this to you about how you can do a CCYR or CCRY when the pivot's around. Yesterday, Kai, there was a BMB right here with a CCRY, and that was why the price shoot up immediately. Excellent, great eyes. So you can see, guys, that it's not that I see the chart now, I think, oh, these come down, break that one. No. All these things that I just said earlier, right, 3 minutes ago, all these are educated, taught during the class. And you just have to follow. So guys, think about this. Whatever I share with you, right, I really, it's the same thing over here. Nothing has changed. Got it? All right, agree? All right, let's go. So let's look at the news for today. There's some news first to begin with. Let me find the screen right now. Okay, so first news first to go with the day is this. Okay, now what is happening? No kidding, guys. The rising fish prices is happening in Malaysia. All right, Kukuk, Johor, they're receiving more orders and they need to really try to do something with it. So now the fish prices in Malaysia is going up amid supply problem caused by unfavorable weather and obviously labor shortage, right? So this is something that you must expect, yeah? And apparently, right, there will be a 15% decrease in the landing soon. So again, likelihood prices of fishes will go up. And of course, again, you know, people like, oh, complaining, you know, how no chicken eat fish, no fish eat what? Okay, all right, so that's the first thing. Now, home prices has went up, okay, despite what is happening. And this is terrible because inflation is going up and that home prices is going up. But the thing is that the buying is not following through. I'll show you now the S&P Case-Shiller P index later on. You will see for yourself. Now, sterling is taking on emerging markets characteristic. All right. So sterling prices have been quite eccentric recently. Let me show you sterling recent prices. Let me take a look now. Sterling is pound, by the way. You can see that. Remember a couple of 2 weeks ago, right, when the pound was coming down. Remember, then all the analysts were saying that, oh, time to sell the pound. Pound was going to crash. Then what happened? Look at it. The market rebounded. You see how terrible these people is. Okay, but then I'm going to be upfront with you. I think it's time to sell pound. Yes, pound now is 1.25. Now, very rare you see me talking about pound or currency on MAO, right? But today, I'm telling you now, pound is going to come down soon. I believe that pound is going to be pulling back down to 1.23 very soon, okay? So it's very rare that I actually talk about Forex and on MAO because it's so slow. But today, I'm telling you, longer term, I'm going to see the pound coming back down to 1.23 in the coming probably 2-3 weeks time. Why? Because I strongly believe the dollar is going to recover. And if the dollar recover, the pound will be coming down. Okay, all clear? Yes, very rare. I will do pound trade, currency trade on MAO. So hopefully you guys can take advantage of this and then probably can make some money. Okay, I will be doing that, that's for sure. So maybe will you join me? All right, okay. So take note of that, pound coming down to 1.23. Okay. Okay, next one, we will have Taiwan. So the thing is this unfortunate news, okay, apparently one Taiwanese man committed suicide after losing nearly 6 million NT. All right, this is the Taiwan currency. So in those of US dollar, it's about, if I'm not wrong, it's 3 million. Yeah, I think the article was here. Yeah, correct. 2 million. Okay, he lost 2 million US dollar. Oh my God! Because you know why? How bad it is? It went down to as much as only left 1,000. That means your portfolio, 2 million US dollar become 1,000 in just 2 days. Oh my goodness! I think anybody see it, right, can't take it. I'll just be honest with you. And they say $2 million is the entire saving and all the thing that he's been doing for the last how many years. And now 2 days, the whole thing evaporated to $1,000. How do you feel? So it's a very sad thing, but then this is the scary part of the crypto war, yeah? Now, of course, Ukraine now applauds EU ban on most Russian oil imports, okay? Ukraine can applaud all they want, but the people is suffering. So the thing is this, now there are fighting rages still going on in Donbas city, and apparently it seems that the Russians are winning, no? If I read the article correctly, it's all right. It seems that the Russians are winning, but of course, it's still not really mentioned, so I'll leave it there. Now, of course, if EU ban the Russian oil, right, then obviously the Russian oil will have to be sold to other countries who wants it, and they have to pay in rubles. And because of that, right, the rubles are doing pretty okay. So I was wondering whether this war, right, is good for bad, honestly. Now, I do expect that June will be a swoon in the market right now, meaning the market will not be moving much, but I don't think so. I believe it will move more than not. And of course, we're going to have the Federal Reserve quantitative tightening very soon. And obviously, it's all right. It all depends on what you're going to do, but we all know that you're going to tighten the first 3 months and then even more by next 3 months. So all this information you can read on your own. But very important is that Mike Wilson says that, right, this is not all clear yet. In fact, he says that there will be some recovery, that's for sure. but it will still continue to go lower. In fact, he's still thinking that the S&P 500 should likely be heading towards 3,400. His view is this: you can go back first, then it will go back down again, and it will happen by the end of August. So he's saying that, okay, next 2 months it will happen like this. Now, for me, right, I think you don't need to take 2 months. I think another few more weeks, we can see the impact. Okay, anyway, I'm not from Morgan Stanley, so yeah, you might think with a pinch of salt, okay? All right, so that is what I will share with you in terms of news site itself. All right, so it's done. Okay, cool. All right, so are you ready for the alternate market news right now? This is going to be a mouthful, at least, what, 10 slides here itself, and a bit confusing because I tell you I'm going to do a bull bear in between. All right, how many are ready for this alternate market news? You're ready? Hit the word ready right now so that I can feel your vibes, okay? Or I prepare. Susan, can I WhatsApp? WhatsApp. Then you hear my mind like that. So my Are you ready? Okay, so I can see that Michael is all ready to go. All right, Stephen is ready, Lian is ready, Peter is ready, Karine, Kai, Lionel, Eugenio, Johnny. By the way, happy birthday, Johnny. All right, I was waiting for you to pop up. Great, happy birthday to you. All right, wish you all the best and all the great things bestowed on you. Yeah. Okay. Happy birthday to you. Sandra Kuala. Yeah. See. Hey guys, as long as you are my Facebook, you're in my Facebook, and I happen to know that today's a birthday, I sure greet you. This is really me. All right. I really put everybody, family is always first, in my opinion. Yeah. Okay. But of course, you must be my Facebook friend first to begin with. There's no way I know that it's a birthday today, right? If he's not a friend. Okay. All right. Ready? Let's go. Now, last Saturday, we have a very good considered preview workshop, okay, a pretty good one. And of course, 97 people actually sign up for that. That's really one of my best deal ever as a trainer. And of course, what happened, because we have this, what they call money back guarantee in a way, if you don't make back your fee. And truth be told, not too bad. This morning, we have racked in $1,000 US. Wow, not bad. That's about 1,374 Singapore dollars. All right, so pretty good, very good. Imagine that. You just have to join us on Saturday, and then by Monday we give you a trade call, and by Tuesday we make money already. Hey, not bad, right? Okay, all right, that's a pretty good deal. And of course, many of you have posted your winnings to me, but I'm so sorry, I'm so busy now. I checked my Telegram, I got 300 messages not read yet. Incredible, right? I'm gonna go crazy on this. So guys, wait for a moment. Let me just go through bit by bit. I will, post your winnings, and those who have won money in the market and you're in this particular group, the 1515 project, then I will post it up. All right, thank you once again. Alrighty, thank you for all the trust over here as well. Okay, so now let's go into this. Germany inflation is at ridiculous level. Oh my goodness. Now we've seen worse, we have seen crazy time, but not right now. Example, from 1995, the inflation is about 2%. In 2004, it's still the same. In 2009, it's still the same. In 2014, it's the same. 2019 is the same. That means for the last 20 years, the Germany inflation has been quite stable, okay? Really quite stable for that, right? But now, oh my goodness, look at it, 2%, oh my friend. That is the average for 20 years. Now it's 8% and still climbing. If the crude oil price go past 121, oh my God, I really don't know what will happen. Kai, you're in Germany right now, right? Can you share with us currently now, right? How's the people feeling right now? Now, Kai is actually one of our students, and he's from Germany, and he's always trying to wake up himself early morning to just listen to us. Incredible guy. Right, I think this is like now like early morning for him, 5 a.m. I think. All right, so Kai, can you just share with us, just type it in. I would love to know what's the thing right now at the moment, okay? And you can see, guys, this is really national measurement versus the harmonious measurement. It's the same. They're going together. It's not like you just inflated of one certain part of it around. This is crazy. And of course, EU, oh my God, EU, look at it. The energy inflation numbers also go crazy. It's my God, look at it. Now you can see that, right, there will be repercussion because once the energy prices goes up, right, the next thing will be the food. Yes, the food will get hit because all the costs will be trumped to the food stuff, because food is the #1 logistic cost. You can don't buy appliances, but you cannot have no food, right? So after that, what happens? Services, yes, services will hit, and then you hit across the board. This is really, really, really bad. Okay, Kai have just updated us. He said that he's very angry over there. People are getting pissed off, I believe. Bad situation for 80% of the people here itself. Oh my God, this is really bad. So Kai, really do yourself a favor, make more money from the market to pay our bills, okay? I mean, you can choose to eat lesser, but your kids need to eat, right? So make more money from the market and stick to the market and follow the boys, okay? And make the money, yeah? So guys, this is really real stuff ongoing right now. And you can see the problem here. Why the Federal Reserve are not doing anything? Why are they doing so slowly? You must understand, there's a problem, my friend. The largest bond portfolio holders is not BlackRock, it's not this Peppers, it's not Vanguard, it's not PIMCO. The biggest one that's holding the portfolio, the bond market is obviously our dear Federal Reserve. So imagine now if they hold so much and the bond price is coming down ridiculously low because of the yield is going up itself. So think, how much are they losing? Oh my God, they're losing a lot of money. They are losing a lot of money. So you can see now the Federal Reserve is carrying a $330 billion losses. Now think about this right now. If the yield is going to continue to go higher because of inflation, to combat inflation, then obviously the bond prices will go lower because bond price and the yield, they are inversely true, right? They're inversely related. So think about this right now. If the yield is to go up higher, the bond price will go lower. My goodness, how bad would that be? So how can they really increase interest rate when it actually kills them? So on the side, you can see right now, the Federal Reserve now is really true. It's like on Reuters, they are losing by $330 billion of unrealized losses. And this will get only bigger and bigger because of their current position right now. So because of that, right, it's become very difficult for them to hike interest rate without thinking. Because if they do that themselves, right, they're killing themselves. So now they're in a catch-22 position. To raise interest rate is to do this, but to raise interest rate, it will kill them off. And that's the reason why the market is doing that. This is really crazy. €100 for small wood buying. Oh my God, small food buying. Yeah, okay, understand. Scary, right? So you can see right now, right, if this US Federal Reserve continue to do this, just the increment of interest rate alone itself, right, will really kill them. In fact, every 1% increment, right, will cost the US government about tens of billions of dollars in just interest alone. This is crazy. This is really, really crazy. So now you understand why it's out at Federal Reserve, right? Even though they really want to do something, right, they find it very difficult to do something because why? They notice that they'll kill themselves if this continue. But we all know that, right, today we will start to do the reduction, and the cap will be initially $30 billion per month. Then after that, it'll be $60 billion per month. So with that understanding here itself, right, we should be, get the feeling very soon. And of course, you can see this is Fed numbers. You can see that from the economic data, the Federal Reserve is now stopping any form of guidance and help. They're just waiting for June to come to collect the orders, okay? So this is actually another very clear thing to tell you that, right, the market is getting weak, and it's not because of anything else, but because they really lack the holders. But of course, we do see a largest inflow of equities in 10 weeks. The last 10 weeks, right, we had the largest inflow. But the problem is this inflow are not the big boys, are the retailers. And they are buying into ETF. So somehow someone has managed to convince them to buy more ETFs. And we buy ETF, we start right now buying individual stocks actually. So that becomes a problem. Okay. So who are these people that are buying? Obviously, people from the retailers. Now, this is where we go to social media, right? You can actually key what are the keywords there. And you can see, right, the keyword is whenever people look out for bottom, right? What's the meaning of bottom? You notice that very incredibly that is near the bottom. Okay. So with that itself, right, they're trying to tell us to say that market may recover because now the sentiment is not the same. Now, I will tell you, this is how I see this, yeah? In my opinion itself, right? Okay, in my opinion. Right, in my opinion itself, right, you can actually see that there's going to be another wave of selling wow, when people are keying this bottom thingy itself. That means that when people are keying in, telling you that I guess they are searching for market bottom, right? There will be another wave of selling. And then after that, that is where the base is. A bit of a capitulation feeling itself. Something like that. Yeah. Okay. Cheng Kui says that understand Japan holds the US bonds. Yes, they hold a lot of bonds and in trouble. That's why US did a lot of politics stuff to help them, a lot of things in between. That's the reason why Japan gets so close with US recently. A lot of reason for that, as long as you know how to stand your position there. So of course, I'm not saying that the market will crash. I'm just telling you that whenever all these come together, right, things will happen for a reason. And that's the reason why I'm telling you this, that there could be a 1,000 points movement very, very soon, okay? There could be a 1,000 point movement on the Dow Jones very soon. Now, like I say again, I cannot tell you which side would it be, but I cannot deny myself that I will think that it's most likely on the downside, but I can be totally wrong. So that's why I'm sharing this with you, okay? Got it? Yep. Okay. Excellent. Okay. So now this is where we get a little bit more complex. This is a very interesting chart. We don't see in mainstream media at all. Right. This from getting from Bank of America. Apparently, it's all right. Recently, you just need to have $10 million. You can move 0.2% of the S&P yourself. My God, that's how crazy it is. Now, recently, we do see the volatility in the market because the liquidity available is so lacking. So because it's lacking, right, anytime any sudden push up in the market, right, it will cause the movement to come in for the S&P. So those people who trade S&P, right, will have noticed that recently the up and down per bar itself is quite crazy, right? I mean, up by 10 point, down 10 point, up 10 point, down 10 point. Do you feel that? Those who trade the S&P 500, do you feel that the S&P is behaving like this? It goes up and comes down very dramatic, very fast. Ding, 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 you know, like cartoon like that. Why? Because you can see now, right, this is the funds for liquidity movement, and compared to the percentage gain or losses, it seems that the congregation is near at the 0.2. So that's why now it seems that anybody can push the market as long as you have some money available on your side, okay? So that's the reason why you have all these things. So now, some people are telling you that, right, there are more buyers than sellers right now. In April itself, right, there were more sellers, now got more buyers. Now, I never believe this thing of more buyer, more seller. To me, it's the same thing. Buyers and seller is the same because you need to have one willing buyer for a willing seller. But never mind, I'm not going to go into deeper. But basically, in short, I'm trying to tell you this, that because of that, now more and more people are buying, and they're buying on retailers. So the question comes in, if more and more people are buying and they are retailers, so who's selling? Who is selling? That's a question, right? So I also don't know who's selling, but I just tell myself that I have to be careful. So if I'm going to see a very big movement coming in, I won't know what to do. Yeah. So apparently that's what happened. So the thing is this, back then, right, when the market was telling you there were a lot of people buying back their shares and things are supposed to be good, that was here. And that was just weekdays before the pandemic come in and the market lost more than 40%. All right, so of course, people coming and buying doesn't mean it's good. Sometimes you can be in a very terrible position. Yeah, this is what happened on that time back in 2018. Okay, now let's look at what the Federal Reserve sees right now. You can see during the pandemic time and the current situation now versus pandemic time, right? We are now still way 21% higher than the pre-pandemic time. So the question is this, if without the pandemic, right, what would be happening? So this is the reason why people are watching now. Thanks, Louis, for giving me the thumbs up on that, on S&P movement. Yeah, I know you trade S&P too. All right, so now the thing is this, the SPY gamma level, right, means that most of the people are looking at 420. So which means a 4,200 level. So most people are looking at the S&P 500 to have a bit of blockage at about 4,002. So whatever level now, right, it likelihood the market might be going there, yeah. So I prepared this for you, the one I just shared you earlier. I told you, right, very surprisingly, the volume actually went up. But there's something that meets the eye itself, right, is this. I noticed that whenever there's a huge volume on the on the S&P, right, you can see that it always seemingly will give us the turning point of the market. Okay, you see that? Now, of course, sometimes it's all right, it just basically doesn't happen, and then it just move higher. But I'm trying to tell you this: whenever I see a big volume, usually the market may actually have a big movement. So I really don't know which side to go, and I'm just asking you guys to tell me, all right, which side do you think it will go? So in terms of numbers, these are the numbers. Now, in terms of upside number, we can talk about 3721. 4721, sorry, 4271 for the upside here. Okay, so upside is 4271. That's about the same level as what most of the analysts are looking at. Now, how I get this number? Because of this whole turning point around here, and the market just know how to stabilize itself. Okay, the second number 4132. Okay, this one basically is to show you the support over here, and then the thing here. And of course, talking about number game, we're talking about the potential BMB that might happen. And of course, we have the lower number at 33, 38, 77. And the last one is 3688, the one I've been there. Okay, so with these numbers here, it's all right. S&P 500 upside potential is 4271. Okay, upside potential 4271. The downside potential is 3857. 3857. Okay, so these are two numbers that I think the S&P should be moving this coming 2-3 weeks. Okay, all right. Okay. All right. So let me just ask all of you now. Do you think that which number will come first? 4271 will come first, or this 3877? Yeah, sorry, 3877 will come next. Will come first. So 4271 versus 3877. Which one will come first? 4271 versus 3877. Which one will come first? Okay, Peter Leong says that 3877 come first. Susan Tan say 3877. Louis say 4271 come first. Sharif also say 4271. Chuket also 4271. Kai 4271. Jason 3877. Stephen 3877. Leslie say 4271. Okay, and Amir also say 4271. All right, so again, I say again, everybody is entitled to their own view. There's no right, no wrong answer here. If you would ask me, I would say that, okay, if the dollar is to really go up, then the number 3877 will come in. I repeat myself, if the dollar really goes up, then 3877 will likely be happening. But that's condition, the dollar has to go up. All right, if there's nothing itself, then yes, 4271 will be going up first. Because from the chart view, it looks like the impact to go higher. But then again, well, we need to have something to push it, right? Regardless whether it goes upside or downside, there must be something to push the market, yeah? Okay, so let's see who's right, who's wrong later in the week, okay? All right. Now, this is where I want to share a lot more stuff to you. I know that you may know this, but I just go through this again with you. Now, I've been telling you this since 2008 until today. The only thing that propelled the stock market higher wasn't just the growth of the economy, but because of this Federal Reserve, who relentlessly pump in so much money into the system. They pump in total $9 billion in the market. $9 trillion. $9 trillion is a lot of money. Think about this. So if you're going to pump in $9 trillion to Singapore STI, I can tell you STI will hit 50,000 easily. Okay? All right, based on the market cap. So my point is this. You can see that there is a direct relationship with this thing. So I want to show you here yourself, guys. Focus on this area here. Okay, focus here because this is the only way you can see it. Focus your area here yourself. Okay. Now I want you to focus on the point whereby you see whenever there's a bit of pullback from Federal Reserve balance sheet, you can see almost instantly the stock market, the one in blue, will have reaction. Can you see that? There will be some reaction because of that. Can you see now? Yeah. So that means that every time when Federal Reserve actually pulls the handbrake, right, the economy will, the market will not do anything. The market will just follow through. So now the question mark is, how come the S&P is doing it beforehand? Well, that is because inflation is in the picture, and everybody knows that what will happen next. So that's the reason why you can see the S&P is coming down despite the what they call QT measurement has not been implemented. So the market is always moving through, moving first. All right. Okay. All right. Louis say you want me to be right first. Thank you very much. Also, we have more than 100 people on the same side now. Okay. I also hope for that to happen too. Yeah. I also hope for that. Yeah. So my point is this, guys. If you really understand this chart, and it's from 2008, then if there's going to be a pullback soon, which is as good as today, what do you expect to see the market to happen? What do you think will happen? Right? You think about this. If you believe in this chart right now, and tonight, from today onwards, the Federal Reserve is going to take some money off from the balance sheet in a way, all right, because they're not going to buy further, meaning they're going to expire. It's the same impact. The balance sheet will come off a bit. So what will happen? Then obviously it's all right, the stock market will come down. If let's say it really had to happen this way. So that's the reason why I felt that, right, we should be very careful this week, despite now a lot of people calling for buying in the market. So this is where it gets very interesting now. I'm going to bring Jim Cramer into the picture. Now, Jim Cramer actually brought in Larry Williams into the picture, okay? Wait a minute. Oops, sorry. I think I missed out one slide. Never mind. Okay. Right. Remember last week, Jim Cramer talked about Larry Williams' prediction, and it was spot on. It was spot on. The market went up, right? So kudos to Jim Cramer. Kudos to this Larry Williams. So now Jim Cramer continued to leverage on Larry Williams and says that, right, based on the statistics, as long as 95% of S&P 500 stocks advance is at a low level, usually the market will rebound. And he actually show you what happened in 2009 to 2012, 2016, and year 2020. Okay. Then he says that, right, through this Williams 12-year cycle, since 1963 and 1975, every time when the cycle goes low, the stock market will always rebound. And of course, he also mentioned that through this cycle, right, you can see that the market itself, right, is very accurate and stuff like that. But if you look carefully, the market actually paused down a bit during those periods. I can be wrong, but I think that I'm right based on what I'm seeing right now. And of course, you know, Jim was just saying that, right, okay, nothing, won't worry, things will be better. And because now, you know, things are, you know, it should be better. So he's saying that now the 12-year cycle are saying that, right, we are near a bottom soon. The last cycle was 2010, then it was 2022. So was just inviting us and, you know, talk about it. All right. So guys, this is what Jim Cramer had to say. And his parting sentence was, he believed that based on the Larry Williams, this what they call forecast, the market should be able to continue its rally all the way to September the 1st. Okay. So he's telling you that. But I told you, right, I have a video of him telling us something different and saying that, right, the market will continue to go down at least for the month of June. So again, question mark, question mark, question mark. Yeah, I don't know who to take on, but of course, that time that one was talking about was S&P, now it's Dow Jones, so we don't know whether which is correct. Okay, anyway, this is from Larry Williams. Continue. This is the Case-Shiller 20 City Composite Home Price Index. And my God, look at it. Okay, let me just bring in the, I think you cannot see the date, right? Let me just put it in for you better. Can you see right now better, right? You can see the time was this, and back here in 2004 to 2006, right? Everybody was going gaga over property. Then after that, right, when the thing came in, oh my God, everybody just skipped, right? But I told you before, as long as things are okay, you can try again. And truth be told, I think 2011 or 2013, you came back to us, and then that's where it is happening. So now, where are we now? We are now at the highest level for the City Composite Home Price Index, highest level. And yet, we are now having a question of, don't know whether can we take it. So why am I telling you this? Because this is the highest level since 2004, and of course we know what happened to the market later, right? So again, that's the thing that I want to share with you. Okay, so this is the Gallup Economic Confidence Index, and you can see that, right, the Americans' own rating is not getting any better. In fact, it's getting worse. Okay, all right, so this is again another step in the face, but this is what's happening right now in America. And of course, this is the PMI data. You can see the PMI data and S&P is going right in tandem now. It was earlier, it was going away, right? I think it doesn't matter, but now it's actually back in tandem. And of course, this will drive the some of the liquidity, but of course, liquidity will be going around. So let me just see how it goes here. All right, so that is all the alternate market news that I'll share with you for today. You can see that a lot of things are here everywhere, but I'm just going to tell you this. To me, it's all right. As long as the US dollar is going up, it shows us blatantly that the interest rate factor environment will start again. And of course, despite whatever happened, there will be a repercussion on the stock market. That is what I want to share with you. Okay. All right, let's study the charts right now for the next 10 minutes. A quick one. Let's see what the bull says, what the bear says, and what the lemming says. Okay, let's go. Okay, so first of all, let's look at China. Now, China has went up and hit my first resistance. And I mentioned to you, my resistance itself will be here at 13593. All right, so what do you think? The market has really resisted there and might be coming off, right? So we will look at it and see how it goes. 13593. All right, that is my view on the on this China A50 right now. As long as the market stays below 13593, I still believe there is room to go down. Yeah. Okay. All right. RSI side, everything's okay, so no much problem. Okay, let's look at the big one, the US market right now, the Dow Jones. Okay. Now, Dow Jones today is a very interesting day because the opening price is actually above pivot 1, right? So above pivot 1, that means that as long as it stays above OP, it's a buy. So this morning, it was a buy at the beginning of the day, all right? Now, once it is a buy, you can see the first target was 33,173, and the next one is actually higher level at about 33,000 to 34,000 level. So this is what happened. So what I figure is this. Hey, where's my KSI? Okay, KSI. My KSI today is green, but it's a down tick, right? Can you see it's a down tick? So that means that the upside pressure itself will be kind of limited. Yeah. So let's look at the 15-minute chart, a quick one. So you can see on my screen right now, a star is born already. A star is born, and you can draw 2 lines. And you can see now very clearly, once the star is there, you will know that the market is also there. And what happened? Below this point itself, right? If you like shorting, you can do a short. Because it's below MLP also at the same time, but it's above OP. So you can, whatever you are doing, all right, testing out that. Now, of course, if the market breaks below OP, right, then of course there will be likely a further selling. And this time around, we go to this point here itself, KTR -1. Okay, and that will be 32,965. Sorry, yeah, it's not easy to draw freehand. Okay. Okay, let's see whether can we see 32,965. Yeah, let's take a look. Okay, let's go back to the PowerPoint. Hey, sorry, my bad. Let's go back to the charts now. Okay, Dow Jones is done. Let's look at this NASDAQ. NASDAQ now is back to opening price of the day. It's not a doji, but it's actually above pivot 1. So same thing again, if the market for NASDAQ goes below pivot 1, 12,633, there will be some selling because I believe that this market likely will break down. Now the thing is this, the market has went up from here, hit the BMB perfectly, right, at 12,700. So now if it pulls back, right, I think it will go back down again to 12,394. That's about 300 points from UAR right now. Okay, Now KSI is green, but it's actually a lower. It's a mix. It's a green, but it's downtick green. So that means that we're still buying. Okay, it's still buying, but it's buying will be kind of limited. Yeah. Okay. Okay. This is S&P 500. Now S&P 500 is now resisted at the MLP at 41.56. All right. Okay, 41.56. The day high was 41.58. Very nice. And now it's pulling back by 10 points. Now, the same thing again is actually trading above OP and above pivot 1. So if the market stabilizes, we can see going up again. It is possible, yeah? So traders, take note of that. Okay. Okay, all right, so let's continue. But do note that the KSI for the S&P 500 is red, is downtick red. So today the market will be a little bit on the sell side. Okay, Hang Seng, brilliant. Look at Hang Seng. Hang Seng opening price was just marginally near the pivot 2. And of course, it went up on its own and pulled back, right? And then of course, the boy came in to save the day by selling the market. So as long as the market stays below pivot 2, below OP is a sell. Yes. So again, we can see right now on the intraday chart, if you actually do this properly, you will see what happened today. Now for Hang Seng, we trade 5-minute chart, yeah? Okay, so Hang Seng, you see that the market open already, right? It's already opening price is here, and below OP, below P2, CCYR, sell. Okay, done, perfect. Hit the perfect spot there itself, right? Now I created it. Then after that, it recovers, and then what happened? You can sell again, right? Yes, indeed, and boom, it came down all the way to KTR -3. Yeah, I could have a jump bill here. But the thing is this, why not hold a profit, right? So if later on another CCYR, I think that this is going to be a good sell again. So traders, watch out for it. Okay. Okay, Nikkei. Okay, hold on. Okay. Nikkei today is climbing up. Okay, it's climbing up. Nikkei opening price was here at pivot 2, and once it stabilized at pivot 2, it goes up, and now it's moving towards the pivot 1. Now, why is happening that? Because the dollar itself, if it's going to go up, right, that will hold back inflation problem. The reason why we all know that the yen recently been very, very comfortable because of the dollar. So now the thing is going to happen, then of course we may have to have a expectation. All right. So for now, at the moment now for Nikkei, if you have to cross this MA 200 first at 27,404. If we cross it, which is now trying to cross, once you cross it, right, we have to bring it back down all the way to this here itself. Okay, the market couldn't go any higher. There's a chance of the Nikkei coming down all the way down. So but at the moment now, everything looks good. So there's no way to fight the Nikkei yet. Just have to stay firm with whatever you look. Okay. Now this is DAX. DAX is brilliant. DAX went all the way up, right? Because the boys were all the way buying. Very beautiful. Okay, but that yesterday pulled back towards the closing. So with the market down a little bit, maybe DAX will come down alone roughly around here. And that will be the thing that I'm looking at, right? For it to come happen, that'll be 14,150. Okay, all right, so that is the DAX movement. So we're looking at DAX to go down to this price. If DAX really goes down, I believe DAX will come down to 14,058, yeah? Okay, about 350 points from where we are right now. Okay, crude oil. Now, yesterday crude oil came down, right? I half suspect it was due to our Joe Biden. I think that he released more oil yesterday. That's why the oil just came down, crashing down when the dollar was strengthening a little bit. I mean, seriously, I know that the dollar impact will hit the commodity, but the way the crude oil came down today doesn't really look like a impact. Look at it. You can see from here itself. Look at it. It was all the way going up, and then suddenly after that, just look at the crude oil. One single 15 minutes bar, right? My goodness, it actually moved. How much is that? Moved $3. No, my goodness, $3 all the way down in 15 minutes. $3. You know, this is actually multiply by 3. Yeah, so you can see that so it's a very big movement down from here all the way down. $2 movement down all the way came down in just 15 minutes. Okay. All right. So what will happen now for today? Now, based on what we're seeing right now, there's a BMB over here, because of the crude oil. So that means that the downside potential is 107, which I don't think so you hit. And the upside potential is 124. Okay. All right. So of course, you can see that at the moment now is 113. The nearer one will be 107. Okay. All right. Yeah. So which one is a 2 level to watch out for? Now, I told you, right, my view is this crude oil will later go up again because I believe that the recent pumping out of prices done by the Federal Reserve. All right, yeah. JB only say 12 seconds. Okay. All right. Okay, so that's crude oil. I still think crude oil will go up to 124. So my view is this: in the longer term, I believe that crude oil will find strength and slowly and steadily go back to 124. That means it'll be higher than the last one itself in a way. Yep. Okay. All right. So we are done with all the major indices. Let's look at some commodities right now before we go to crypto to end of the day. Now, gold continue to go down. Oh dear. Okay, gold, as I said today, is a CCYR on the day chart. So by right, if gold opens and go lower, it will come down. Honestly, I'm still short in gold. I think gold will come down today to this price, 1822. Now it's 1833 only, no? I'm looking at 1822 today. Now, why is that so? Because we have a KSI jump and it's red in color. So that's why I believe that there'll be some selling to 1833 level. Okay, and it's happened to be here. All right, interesting. Yeah, of course. Okay. All right. Yeah. Okay. All right. How about silver? Silver is also going to come down. Yes, silver is going to come down. Silver is a CCYR also likely going to come down. I believe to come down to $21.13. That is the good level to look at again. Of course, to come down all the way to $20 flat. I don't think so. Now, same thing again. The KSI is red and there's no blue bars. So that means that the downside itself will take some time. You won't be like immediately flush down and stuff like that. Okay. All right. Let's look at the last two will be the Ethereum and Bitcoin. So let's look at this Ethereum first. Now, Ethereum, I gave a buy call 3 days ago, and I think one guy called Low have followed me and profited because I said that at 1,009, and in fact at 1,002, 2,000 if you want to try. So for this Ethereum now, the KSI is green and there's no blue bar, so it's actually positive buying. But the thing is this, today is a doji directional day, and I said before, right, likelihood when Federal Reserve going to press that button, anything that do with asset management and stuff, right, likely will be hit. So I suspect that we might see a what you call here, where the market MLP and the MAs are all nearby, right? It's very clear that the market will go towards one particular side. So if the market really comes down, it will come down here this way, just to pick up, and let's see how it goes. Okay, for Ethereum. So I believe that it will come back down to 1,780 again. Okay, I believe that. And last but not least will be the Bitcoin. Bitcoin has recovered strongly. That was wrong. I thought it would go down lower to 27,000. So yeah, on the face. So my thing is this: it has triggered the BMB at 32,303 already triggered. It took only 2 days to hit that target. So now nothing much. If let's say it's gonna go down, unless it goes down enough, like go down to 32,020. Okay, 33,204. In fact, likelihood that will be a good time. Yeah. Okay. So look at it and see whether we can get that. Okay. All right. KSI is green and I think it's all okay. All right. So I've come to the end of today's MAO. Thank you guys for listening. Right. The thing is this. Let me just summarize before we go. Definitely for sure, it's crude oil prices will be the main catalyst. And as long as crude oil prices stays above 115, I can't see how inflation can go away. Now, of course, some people are buying because they are looking at the stock market bottoming out soon. Well, I think that there will be one more round of capitulation to really happen first. Then the market can really give up. And only when the market give up, right, and that's where the boys already come in to strip it. And then we restart this so-called bull bear movement. That means that instead of down bear bull, will be bull bear, meaning it will be more bullish, and then the market just go up. Okay, that will be the next month or next 2 months movement. But at the moment now, I still think that it should be like that. Yeah. Okay. All right, guys, that will be all for today. Thank you once again. I wish you all the best, and may you strike gold in the market. This is Cal signing off. Bye-bye.